contrary to the doomers who are like a broken clock, right twice a day, the market is showing almost no distress whatsoever. I mean, it's just de minimis, you know. This is just a quick chart on everybody's got a disagreement on what the housing deficit is. Are we short 1 million homes or 7 million homes? You know, this is saying 4.5 million in this particular chart. And I can't remember the source. Usually when I take the screenshot, I get the source in there, but for some reason, maybe it wasn't there on this one. But even with a new home building boom, even with the Trump administration saying they're going to declare a state of emergency, they've got a few levers they can pull. They're saying they'll do that this fall, possibly. Scott Bessent, our Treasury Secretary, said that. You know, it's just still a very difficult situation where housing affordability is very low, although it's getting a little bit better. Mortgage rates have been coming down, and they're going to go down quite a bit further, I think, at least by the time Powell's out next year. A little bit before that as well. And here is the inventory picture. This again goes way back. So this is a long chart on inventory way back to the 80s. And you see where we are now. And this is not adjusted for population. Okay. So the population has grown a lot since then. You know, if you pick any point on this chart, the population is higher than it was on the date showing the inventory on the chart. And you can see here that we're at the inventory levels that we had in the 90s and that we had in the 2017 range, but we have higher population than either of those times. So again, housing inventory per household or per person, per capita, it's still very, very low. And this is a staggering chart. If you want to talk about the S&P and compare it to the S&P, it's just truly shocking, because the stock market is obviously, like any asset, a game of real versus nominal. You know, yes, you can look at the stock indices and they're way up, right? But when you adjust for inflation according to the CPI, which is understated, every rebel capitalist will agree with that. You know, outside in the less aware world, they don't know that. But, you know, certainly in this space, people know that the CPI is dramatically understated. So based on CPI, going back over 100 years, there have been almost no real dollar gains in the stock market. If you look at the S&P 500 as your index for it, it's barely up. Like, it's just a nominal amount. And we know the CPI is understated. So if you took real inflation, you've actually lost money in the stock market, except for dividends. Dividends have been really the only return. And I'm not sure how many of the S&P 500 companies pay dividends. I do need to look that up because I'm curious in what the average dividend is. But still, again, you're treading water at best in the stock market, even with these particularly good increases we've had. Now, if you look at the same chart and you just look at the last 10 years, you definitely did better, okay? But you can see when the last tether to gold disappeared in 1971, that's when it all started, the fake appreciation, right? Because of the inflation that created. And so we've got to beat the stock market. We've got to beat inflation. And here's the way it works. Just a very simple example with real estate, right? $1 million portfolio, say that's 3 rental properties. They appreciate at 6%. If you pay cash, $60,000 gain, that's 6%. If inflation is 3%, your only gain is 3%. You're just a little bit ahead of inflation, which isn't bad. But if you leverage those properties with 20% down, $1 million portfolio, you put $200,000 down, 6% appreciation, it's the same $60,000, but because you have less money in the deal, that's a 30% cash on cash return. This is, of course, simplified. Now you're beating inflation by 27%, okay? And that's just a pretty normal, what most experts would agree that over the decades, you see about 6%, okay? You can disagree with that a little bit. You could say it's 5%, 7%, whatever you want, but you know, 6% is about what most experts will say we have overall, right? In nominal appreciation. Now, if you look at a good year, when you see some good appreciation and it goes to 15%, you know, for Tesla people, I call this ludicrous mode, right? But this is not really ludicrous at all. I mean, it's happened many times. It's been
Yeah.
higher than this during the COVID era. We saw appreciation rates higher than this. So, this is not that big a deal. But here's just for the example. It's the same $1 million portfolio. It's the same 20% down. 15% appreciation is 150 grand. But because you've got so little money in the deal, that's a 75% overall return. And you take out 3% inflation, you've beat inflation by 72% potentially.
Man.
I mean, you just, income property has special characteristics that you just can't get anywhere else except with a leveraged buyout. If you're a stock guru and you're doing deals and, you're T. Boone Pickens, well, I think he passed away, but, whatever, any of these Wall Street Carl Icahn, any of these Wall Street tycoons, the corporate raiders, you can beat this. But for the normal person, the only way to really do it is with income property, because you're not paying the cost of this debt, your tenant is. Even if you had to pay for some of it with called negative cash flow, right? Still, you're just way ahead of the game. So just a couple more things. As of this morning, okay, you can see the date on here, September 8th, okay? You can see that the real estate prices are still slightly up year over year, even with this massive affordability problem that we have. Prices nationally are still up. And mortgage delinquencies, showing the distress in the market, decreased again, okay, in July, okay? That's the most recent stat for this. It's as of today. Here is the typical delinquency rate, and we're below that, okay? So there just isn't any real distress in the market. And as I always say, if you want to have a real estate crash, the one ingredient that is absolutely positively necessary, you can't have a crash without it, is tens of millions of distressed homeowners who become millions of distressed home sellers. And without that, you're just not going to have any collapse in real estate prices. So that's the thing you have to have. And we have the opposite of it, right now. So
I love it. And, it's almost like I had this epiphany the other day, I was just thinking about like an asteroid hitting the planet and
well, that might mess things up. Actually, that would cause a shorter supply of real estate. So that actually might be good for the market.
I was just thinking, I was like, yeah, that could happen, but that's not really a good like retirement plan, right? Like, you're kind of reckless if like your whole thing is not really investing or doing anything. You're just kind of hoping the planet ends and everything goes poof in the next 10 years or something. And with the housing thing too, it almost sounds to me like we're in this standoff where I guess consumer expectations, and you've brought this up in the past, where like consumer expectations really haven't shifted to the new normal. So we're kind of stuck in this kind of Mexican standoff. Do you see, like, what do you see happening down the road? Do you feel like the economy is going to turn sour, and then you're going to have those millions of distressed home owners trying to sell their properties to get someplace more affordable? Or do you think there's going to be some financial engineering in the near future here that's going to make this the standoff kind of kaput after opportunities open up and you can start buying houses again for the cheap, or with a lower rate? What's your feeling on that?
I mean, look, there's always financial engineering, okay? Yeah. So we live in a very engineered, centrally planned world, but there's just no question. It's just basic math. What the inventory levels are, what the demand is, what the unresolved demand or shadow demand is from all the people who wanted to buy over the last 3 years that couldn't afford to buy. And when rates come down just a half a point, just a 0.5%, 50 basis points, that's 2.7 million new buyers who can afford and qualify for the median price house. And if rates come down a full point, that's over 5 million, okay? And if rates come down a 1.5, that's about 8 million new buyers who can afford. And we have 800,000 homes for sale, approximately, okay? So what do you think's going to happen? Like, it's so obvious that there's going to be multiple offers. Prices are going to be pushing up. There's going to be much more upward pressure. Like, let's just assume, you can't do math and you are a doomer and you're just stuck in this, like, everything's going to collapse angle. Okay, so say prices don't go up. Well, then what? There's upward pressure on rents because the people can't buy. the population is still higher. There's still a lot of unmet demand. I mean, it's just so simple. Like, I don't know why people try to overcomplicate this stuff. It's just not complicated to know that there's a shortage. We have too much demand. We have too little supply. And that's just the reality of the situation.
No, makes a ton of sense. And I think where people's expectations are getting a little messed up is they're waiting for something to happen.
Yeah.
And it's a timing thing. It's more of a timing thing than it is anything else. It's like, when's this thing going to change? So I have the green light to go do something, as opposed to just
I heard all of those same people saying that in 2005, 2004, 1991, I was in the business. I mean, I've heard that forever. And they just keep missing the boat. And then they just become really jealous of everybody who had the confidence to do something. Mm-hmm. And then they just troll everybody on YouTube saying everything's going to collapse. They're all over Twitter too. X.
It's
just this whole narrative is just not sensible.
It's funny. I listened to Peter Schiff like back in 2018, 2019.
Yeah, the guy who's been wrong since 1982.
And he had me so convinced that everything was going to fall apart in the next day that I sold everything I had and I bought physical gold, and I missed out on some of the biggest bull runs we had because I did the exact same thing. I drank the Kool-Aid and I'm like, oh, it's all going to end. The sky's going to fall tomorrow, and I need to hit the pause button. But the big takeaway is like you said, it's like you need to just look at the numbers and
this is not an optional asset class, housing. It's a necessary asset class. Okay. People don't have to buy a stock. They don't have to buy gold. They don't have to buy crypto. They do need a place to live.
Shelter's pretty important.
Yeah. It's just a necessary thing.